GKFX Prime presents the Market Analysis Webinar.
Hello traders, and welcome back to another weekly analysis video where I take you through the setups for the week, the higher probability scenarios and possibilities for money making opportunities. My name is Dima, and as ever, thank you for joining me. Let's have a look at what we've got for this week. I'm going to start with the news. Let's have a look at the economic calendar and we'll see where the likely driver is going to be for the momentum in the market. So on Tuesday this week, we've got a monetary policy from the Australian Central Bank. Then we've got a speech from the Bank of England, so that may affect the pound. Wednesday, we've got another Aussie news and a pound CPI numbers. And on Thursday, we've got a Bank of Japan report and several news items on the euro. So we may see a big move on the euro on Thursday and possibly Friday. Let's see how it works out. Pay attention to the euro. I would say that would be a major one, and we've got the Aussie as well. And yeah, as ever, there's unexpected news coming out in between. Anything can happen. So let's see how it fits in with some of the setups that we've got for this week, particularly the euro. Okay. All right, so this week, let's have a look at what we've got. I'm going to start with the yen pairs. If you've noticed, the yen has been very weak lately. Each week we've got weaker and weaker yen, which has meant higher prices on the yen pairs. So I'm going to start with CAD yen here. And you can see here, if I go to the monthly chart, it got higher and higher prices. We've just broken this major high right here. That's back from 2014. So really some way back major level right here, broken through. So let me have a look at the weekly. Last week closed bullish, and I am looking for the market to come and hit this level here to take that out. So with that continued bullishness in mind. So now I'll have a look at the lower time frame, and we've just started this week, and this is Monday's candle. So looking to target that next clear high right here. Let's look at the 4 hour. A 4 hour now, we have this little range right here. Just mark it out. The market made higher highs. You can see there's a higher low, and then higher highs. So we have this swing point right here to take that out, and then possibly take this high out here. So what would I like to see? Well, I'd like to see lower prices. So we do have this level right here, if you can see. I'm gonna mark that out. Let's just shift the chart a little bit. And if I go down to an even lower time frame on the 1 hour, you can see that this level right here. So because it's an obvious level and many people will have their stops at this level, I would say that if we take this level out, then it's likely that liquidity will be shifted, and the buyers will be taken out. Many people will be dragged down, and the market tends to do these stop hunts. So any lower price would be favorable. So if I go back to the 4 hour, then I would look at this zone right here as a possible price, better price. If I draw a fib, if you like, from the current high to low, we can see this falls beneath the 50% level, and we've got the 61.8 here below. Yeah, so that's my point to focus at the moment, this zone, and then going up higher. In terms of higher probability, that's what I would look at here on the 4 hour chart. We may have a drop, and if we do have a drop, the market can always bring up surprises. So this, a break of this level right here would invalidate the setup, and then from then on I'm gonna have to just admit that we'll see where the market takes us, and we may not see the opportunity that is expected. There's a bit of a trend line here. Again, this is a very obvious trend line. We've been in this trend for a little while here. It's about two weeks. So when a trend becomes very, very strong, very, very obvious, you never know how long it's going to go for, but at the same time, it becomes too obvious and it may break. So let's see if this holds, this area holds, and we did get a reaction. That will be my level where I'll be interested to get in on. So with the same similar idea in terms of probabilities with a weakness of the yen, let's move on to euro yen, and a similar picture here. I'll go to the monthly, last monthly candle, very bullish. And if we look at the weekly, we got a possible swing here. We had an area right here where the market broke through, left these wicks, and if I adjust this point a little bit down here, left these wicks beyond this area but didn't close below. So I'm seeing this as a possible swing to come up to this level right here. This will be the target area, possible target. If I go down to the daily, we've got this, you can see these wicks more clearly. We've got 1, 2, 3, and this was a retracement, didn't break below this wick, and we've got a kind of if you like, a sort of loose, if I go to the 4 hour, let's have a look, loose head and shoulders pattern. We've now broken this structural level right here, and we're now heading higher. So where could the possible entry be? Well, let's see what I would like to see in terms of a good probability scenario. Would be a push higher, then a retracement on a clear level, and then the continuation to the downside. So we've already had a break here to the upside. Now just gonna see, would like to see a nice bit more price action, and let's see how it goes. Remember the news, the euro news, so this is a euro pair, so we may have to pay attention to that. I'm seeing this loose level right here. This may be another zone, so perhaps a pullback into that. And again, breakpoint level would be, I would say very clearly, it would be this little point right here. We may wick under, and we've also got obviously a break below here would invalidate it. So this is the setup for the euro yen. Again, because it's a yen pair at the same time, you don't want to be trading CAD yen and euro yen at the same time, because both of them are yen pairs. So you would either have to half your risk or just choose one. Otherwise you'd be risking a lot more. Okay, so that's the high probability setup on the yen pairs. Let me now move on to another minor pair, the EURCAD. Let's zoom out, let's zoom right out. I don't think we've looked at EURCAD any time lately. What have we got here? We've got a, let me just move this and zoom in. If you could see this low point right here from way back in 2015, and you can see this wick right here, we just pierced through that level, the 1.3 whole number. So that's a significant level. Significant level to bear in mind. So this bounce is expected. We could see a wick being left here on the weekly here. Again, last week we got a wick right there. Okay, so because of that wick, because of this whole number, because of this bounce that we expect from a very, very major level, then I would want to see a bit of upside price action. It's all coming together in terms of probabilities. So the bias here is going to be to the upside. And if I zoom in here, we can see that we have had that delay, and here's that wick that was left. And the next point where I would expect the market to reach, if the probabilities are indeed to the upside, will be this major structural level right here. So that would be, this would be the next level to reach for, and then after that possibly this level right here. So I'm just looking to the left, seeing the structural points where we may have stops. Go down to the 4 hour, we can see that we had this very long trend right here, which has now been broken. We've got a structure break right here. Market has pushed higher right into the upside and showing that momentum. So what I can see right now, based on the current price action, I can see this level that was formed, and the market is now reacting off that level, gave a push higher and moving higher up. So there's two scenarios here that I would look at. First possible scenario, bearing in mind again the news, we've got Euro news, the major item. We're looking at two things: either a better price into a nice lower area, nice retracement down, and then this would be a buy scenario into this level right here, or if we actually break this high, structural high right here, then I may think about a break, pull back to a better price, and then a continuation to the next area of interest that I pointed out, which is here 1.33 level. Bear in mind we're still in a very heavy downtrend, so this is this whole move is for buy ideas, is part of a retracement on a longer, higher time frame. So you're going to have to bear that in mind. This may be a slower move, a bit of a riskier move, and the probabilities need to really stack the probabilities in our favor to make this a decent trade. So that's the scenario for EURCAD again. Let's see how it plays out with the news. If we just shoot up higher and then push higher and reach this level without any pullback, then we'll have to just leave this idea alone and just sit it out, unfortunately. Yeah, but I don't even know how high the market could reach. If I look on the high time frame, we could go even higher still, because we've got this zone right here, which we may reach even higher into 1.134 before the continuation of a drop, if it does continue to drop. Yeah, but the safe target is this one, and then the next one possibly up here, a bit higher up. So that's EURCAD for you. Let's look at the next idea. Let me move on to gold. So we've had in previous weeks, we did have often look at gold, S&P, and oil and Bitcoin. So I'm going to continue with those this week as well. Okay, again, let me look at the higher time frame. Here we've got monthly. Obviously monthly candle hasn't quite finished yet. Let me look at the weekly. Obviously we've got very bearish price action right now. I identified these two levels as targets and from previous weeks, and we have gone down into them. If we look at the week before that, 2 weeks ago, did look at this zone. The market didn't even reach there, so that wasn't a trade, but we did look to that continuation to the downside. And now we have that downside. You got this break of structure lower, continued weakness, just obvious, very obvious weakness in the market at the moment. So what I do see is, if I draw this trend line right here, is I see a possible, this is be a trend line here, and then a possible next touch of the trend line right here, and a bounce off that. However, at the same time, we do have a very weak market, very bearish candles, very heavy. The market is very heavy at the moment on gold. So the question is, do we want to go against that? Do we want to fight this this big bearish momentum? The thing is that at the moment, going by last week, if you have a look on the dollar has been showed some little signs of weakness on last week. So weakness on the dollar would be strength in gold as it's priced in dollars. But at the same time, that would be a pullback of this whole bearish momentum. So want to trade with care here and want to have to see very clear setup play out, because we may see both scenarios happen. It's not as high probability as we would really like. Now, the possibility of this pullback is probability, I should say, increased, because we've got this level right here that we hit into, and we might see a bounce off that. And I did mark these two target points, so I can delete them now. The next possible target for a short would be this wick right here. So let's have a closer look and just zoom in on the weekly. Obviously we closed bearish. This could be a possible bounce, or we may continue lower. We may also range here. It's not such a high probability setup, I have to admit. But overall, the market is going to be a little bit tricky, and it is the beginning of the summer period, which may be slow, and markets tend to be a little bit slower in the summer period. So bear that in mind as well. Don't want to be rushing things. You really want to see something really clear, nice setup play out. This is not a time to take, how should I put it? Take chances where you would have done before, especially in a slower market. Okay, let's have a look here. Daily, we've got weakness. Let's look at the 4 hour. We've got this major swing right here. If I draw a fib, now if we pull back into this retracement area, 61.8 and 78, and we get a reaction off here, we may see some continuation to the downside. Now, if I'm going to look for a higher probability buy scenario, then I'd want this high, this clear swing high, to be broken, and then after that, when it's broken, then a possible pullback and a continuation to the upside to fill this whole area right here where we've got a zone. If I look on the daily, you can see this whole gap in price, which just continued bearishness. There was no swing, nothing. So this kind of gap in price, the market tends to come back and fill it. So that's what I am looking at the moment. And also if I extend to the left, you can see we've got this price action right here. So it could be counted as a possible future support turn resistance zone. If we do that, if we get that push. But if we may get a collapse as well, and obviously a break below this structure low would invalidate that, and we'll be continuing lower, and then we'll just have to see how things work out. We may be continuing the push. The market may want to push into this level 1640. So let's see how it plays out. Again, take some care on gold, and watch out for the market stalling, ranging. That could very well happen. Let's see how it goes. Focus on the price action. Okay, next let's have a look at oil. Oil, an interesting one. We've been going over weeks and weeks over, and we did have last week, 2 weeks ago, and the week before that, a break of this structure, which I think I mentioned if we break below, we're going to go lower, which we did. And we had a little pullback here. I marked out this zone. We didn't reach that zone, and the market left without us. So what's next on oil? Let me delete this level because we now don't need it as a reference point. If I go to the weekly, what I see is this level right here, which I can mark out again for you. It's a bit clearer. And this could be, oops, Gonna see if this zone holds. Now, if this level zone holds, which it is currently producing 2 weeks of wicks, that's always a tricky one to say, down wicks, meaning there is some rejection going on, we may see a push higher into the higher prices that I was originally expecting to move into. Let's have a quick look at the monthly. On the monthly, we did push lower. We're currently looking at this wick right here. So we've moved below these levels, wicked them, bounced off, and moved higher. So now let's see if we have that continuation higher to the upside to take out these highs right here. Looking at the daily, again, we see this sort of swing point here, rejection, and the market is moving higher. Now, to confirm the bullishness of oil and that it's not going to continue bearish, which it seems to be going in that direction at the moment, you can kind of draw this sort of channel here if you like that kind of thing. If it's easier for you to see that, you can see this channel, and we're in that bearish direction. Now, this level right here would be an interesting zone to look at. If I draw a fib from the high to obvious low, I'm gonna reach into that and see if there's a reaction. We're currently in that retracement, and this could be a retracement of the bigger swing to continue to the downside. Now, if there's a reaction here, then possibly we may be going lower, and if we go really push lower, maybe get a better price and pull back, and then looking to continue down to the 88 level. To have a bullish scenario, then I would look for a break of this level, structural point, and that would break major high point, and then from there that could possibly be a break, pull back to get a better price, and then a continuation to that really major price point up above, which is the 121 and then the 130, reaching into those levels. So that would be a nice risk to reward trade, and this one will be a little bit riskier because again we're at a kind of conjunction between the level, the zone that we're looking at, price may bounce off, and a point of retracement where we have a continuation of this whole trend. So let's see how it plays out. Don't want to be rushing it. I want to see a very clear price action for the market to tell us which direction it wants to go in. So that's the idea on oil and the scenarios that I see as possible higher probabilities in terms of setups. Okay. So I hope that's clear for you. These are subtle little things in the market sometimes you need to watch out for, because this is when the probabilities are not so clear. So you may want to see more price, more data before you actually make a decision to really have the market show you where it wants to go. Let it show its hand. So now that is oil. Now let's go on to S&P. We've looked at S&P for a while as well. I was looking at this bounce for the market to move higher. It didn't do that. It went lower and actually breached this low right here, and it's gone down into this range. So I was looking at a higher price point. We didn't go there. Let me just delete all these marks from before so that we have a nice clean chart. Delete that. Now, let's look at the fact that we have this whole range developed right here. If I look on the weekly, you can see these candles, one candle after another, not really going anywhere. We are developing these wicks, which may hint at a bit of buying for the market to go higher. So I'm going to be slightly biased, a little bit higher probability to the upside at the moment, at least for this week. And what I will favor is, again, still going to continue looking at this zone of interest and a push higher into this zone right here, where we've got this gap in price, where the market just collapsed from here and didn't give any real buying opportunities. So it's just selling here. So this gap in the market would be a possible place to reach for. Now if we reach for that, then I'll be looking at a drop from there. Now the question here is, if you're going to be risky, then you could try and trade into that. However, because of this range, because of this block in price action, it is a bit uncertain at the moment. So it's risky. You could be buying here, possibly waiting to get a better price and then buy into this gap level, but remembering that this is a range and this whole thing is a retracement, because we are in this kind of channel clear downtrend, breaking lower. So very much to the downside. The force is to the downside. So don't want to be fighting that. Really want to wait. So this requires a lot of patience. As you can see, we had 1 here, 1, 2, 3, 4, and we're now in the 5th week of having to wait for the market to reach this area, and it's accumulating, which means, because it's accumulating, it's forming this big range. That means there's going to be a lot of orders, and we may be about to see a very big move happening. So we're going to have to be patient and wait for that, because it could be worth it. Would really like the high probability scenario, which is this zone if we get a reversal. If not, this would be the next zone of focus for me. And obviously, because this is a higher price point, then this is the higher probability scenario in terms of price reversing from here and really pushing very heavily to the downside. So we may see that happening. Again, let the market tell us where it wants to go. At the moment, it's uncertain and the probability really isn't there. So it's a good thing to have this scenario for you to see it, because it's all experience and this is what happens in the markets. And then you're going to have to sit on your hands, be patient. Let's see how it plays out. Still favoring, still going to stick to the bias in this case, which is what I've drawn out here. So that is that scenario. And finally, as always, Bitcoin. All right. Now, of Bitcoin, you can see that we have had, how many weeks has it been now? 1, 2, 3, 4, and now we're in the 5th week of a range. So did look at a push higher on Bitcoin here. Was it last week? Yes, last week. And what happened is we didn't get a reaction off that level. The market went lower still, and now it's heading higher. So we had a very, very deep push lower, much lower than expected, and there was no price action. So for that reversal. So now let me delete that from last week's analysis. Delete that, delete that, delete this. Now, where do we go from here? Well, we haven't broken this low, so I'm paying attention to this low, which hasn't been broken, still kept going, held it here. So therefore, not entirely convinced of a continuation to the downside, and I would still look at the retracement, this being a retracement, make a opportunity, take the chance on this retracement and look to a possible buy. This being a retracement of this whole larger down move. And as I drew up earlier, and still it's the case, first I'm looking at this zone right here. That's my point of interest because of this wick right here. And then this zone right here, as I marked out, will be the next level. So let me just extend that out. And now, what can we see? Well, I personally see higher highs right here. I see a major high here being broken by this swing. And now because this low has been defended, we've got real bullish momentum right here. And we are very much about to break this high, which looks like that's going to happen. That will be another higher high and even more confirmation for the up move continuation to the upside. So the probabilities are stacking in our favor, although really have to bear in mind that this whole thing is looking like a range bound move. So because of that, again, I want to see a nice push higher, then retracement to get a better price. You can see that price is not offering any selling opportunities here. It's just shot up higher right from the beginning of the week for this week. And because of that, I'll be looking at these zones and pullback. I don't know where it's going to begin its pullback from, but around this area would be a high probability, a nice risk to reward, and a nice high probability scenario into this level as a first TP at the 25,500, and then the next one will be at the 20, if I do a safe one, 28k, let's call it that. That will be the next take profit point. So this is the price action. As you can see, you have to be patient, and on this one's a great example of being patient and not letting the movement of the market affect your psychology. Just letting it play out, waiting for it, waiting for the high probability, and now we are beginning to see possible higher probability setup emerging. But again, yet again, more patience, more price action, more data, and then we'll see what happens. Obviously, taking out this high would be great, and then taking out this high would be even better, because then we've got even more bullishness in the market. And then it's a case of getting the entry right to get a better price and a nice risk reward into the target. Once more, I'm just going to mention that because this is a part of a bigger retracement, we are in a retracement phase. So we are trading a retracement, which is part of a higher time frame bearishness. So we do want to bear that in mind. It may take more time, may have to be patient. Let's see how the market plays out. Okay. So that is Bitcoin, and those are the charts for this week. And one more time, I'm going to mention the news, so bear it in mind here. We mentioned Aussie, pound, don't have any pound pairs here or for this week, but we do have yen pairs for sure and euro pairs for sure. Always have to take into account unexpected scenarios as well, but if that happens, this is why you have a stop loss. Manage your risk as ever. We'll keep repeating that, and it's always worth repeating because that is the #1 job as a trader: risk management. So those are the charts. In terms of a pick, I would say EURCAD looks quite good, and the yen pairs look quite interesting as well. The others possibly a bit lower probability in terms of where it's at the moment, but of course that could change moving through the week if the price action develops, becomes more interesting. Right, so those are the charts for this week. Thanks again for joining. Hope you learned something, and comment if you have any questions with your setups or these setups. Thanks very much. My name is Dima, and see you next week. Good luck in your trading, and be safe with your risk management, and choose your setups carefully. These are just the possibilities, not saying all of them will play out. Maybe some of them will play out. Choose the one that is the highest probability scenario. Okay, catch you next week, and thanks again for joining. See you then. Bye-bye.